Vishal Thakkar, Deputy CFO at Anupam Rasayan, India, joining us this morning, of course, to talk about a plethora of pieces which is playing out. Very good having you here, Vishal. Let me first start off by getting a sense. The Bliss Pharma acquisition, really, that's the big one for you, right? In terms of size, scale, you're trying to push forward integration as really the rationale for that. Give us a sense of what this adds in terms of portfolio for you, and how much of that portfolio now is backward integrated. How does it play out going forward?
Good morning, Harsh, and thank you very much
Very
for
good
getting us
morning.
on your show. Yeah, you rightly pointed out that it's about the offering a full platform approach. So if you look at our historical acquisitions also, which is Tanfac and Jayhawk, they are also about delivering the whole value chain across from a KSM or a starting raw material to a finished dosage kind of an approach. And similar is an approach here on Bliss as well. Bliss gives us a very good portfolio expansion of pharma and delivering a pharma platform. Today, our revenue from pharma is around about 350 odd crores, and this adds to and which is more on the KSM side. So this offers on the finished dosage side. Also, if you look at Bliss, it is a very interesting one because today their capacities are only utilized to the extent of 30%. Their end markets, especially in the Europe and US and India, are hardly any revenue that they generate from there, which is the traditional markets for Anupam. And we believe that is where we can help them grow faster. And that's the whole approach here we've been looking at.
And in terms of the valuation, Vishal, how do you look at that from a medium to long term perspective? How do you look at synergies start to impact your top line? I'll come to the synergies question actually just in a minute. But talk to us about pure play evaluations of Bliss. You're acquiring around a 48% stake for around 1,700 crore rupees approximately, if of course the 5% also converts. Give us a sense as to how you value this one.
So see, if you look at their peers also, and if you look at the comps in the market, I think they are priced a little less than the average comps that we have seen. Second, also, if you look at from a utilization point of view, they are only 30% utilization. The capex, they've just done the capex and they've expanded their capacities. They have regulatory approvals in US, Europe. So they have a US FDA plant, they have a EU GMP approved plant, they have a WHO GMP approved plant. So in that sense, if you really look at it, I would say it's a good price at which we have done this transaction. And if anything is the market's reflection of the same, I think the numbers that has flown after this information or our announcement reflects the confidence of the street on the same.
Yes, in fact, the stock price has spiked. I'll request the producers to kind of put out the Bliss GVS stock price as well to kind of give us a sense as to how that's played out. From sub 200, it's currently at 430 rupees a piece. In terms of numbers impact, purely Vishal, the guidance that I'm reading based on your commentary is that it's a 4,000 crore rupee consolidated revenue you're looking at. Bliss does around 2,400, you do around 2,400. It should be much more than the 4,000 crore number, right? If I've understood this right.
So let me break it down. So Anupam today, including Tanfac, reported a 2,400 crores of revenue, little less than 2,400 crores of revenue, of which 40 odd crores came from Jayhawk. So if I do a pro forma of Jayhawk, because we have added the balance sheet fully on a line by line, but the revenue has been only accrued for a month and 2 days. So if I add the Jayhawk's pro forma numbers for the year, then it should be in the range of 31 to 3,200 crores of revenue for Tanfac, Anupam, and Jayhawk. And Bliss does around about 900 to 1,000 crores of revenue, and that's where we were saying that it is on a pro forma basis over 4,000 crores of revenue. Is what on a pro forma if we were to add all the four businesses together.
But then growth will kick in when you factor FY27 growth. That would be materially higher.
Absolutely, absolutely. So if you look at what we have what we have guided also on the analyst calls and others is that the historical growth that Anupam had seen, barring the 2 years of FY24 and 25, I think whatever the historical growth we have seen, I think we should be able to do that on a pro forma basis. To my mind, is what we can see. Uh,
And with regard to, I'll take a step back. With regard to funding of this 16 to 1700 crore, you've suggested 300 crore of funding through debt. The balance will likely be equity, but it's going to be non-voting. Am I right in understanding that? And Anupam, therefore,
yes.
will be issuing fresh equity against this?
No, so what we will be doing is Anupam is not issuing any fresh equity, but
Okay.
Anupam is taking a quasi equity or a equity linked instrument at the wholly owned subsidiary where we will be acquiring this, and which would mean that it's a non-voting, non-participatory. So Anupam will be able to consolidate the whole balance sheet and the P&L of the target on a line by line basis with a and with the minority interest coming for the balance amount of equity that we have not acquired for Bliss. So that will be the case. Um, and at some point in time, we always have a right to buy them out, buy that non-participatory equity at our convenient time. So that's how it will be done.
Right. And the growth clip from here, therefore, on that pro forma 4,000 crore rupee base, plus probably what you will do in terms of the tailwind you will get in FY27, what's the kind of outlook, FY28, 29, 30, broadly?
So I would tell you very simply, if I were to say, if I look at all the four businesses that we have, my view is that we should be able to do a very strong growth. Anything between 25 to 30% CAGR is what we have been targeting, and I think we should be targeting that kind of numbers here also. Historically, also we've been able to deliver that. Hiatus of 2 years of 24, 25 was there. But I think if I look at the momentum coming across from a pharma, from a polymer business, our performance material businesses, our EV business, or our ECM coming back as well, we believe that that should be a fairly a very appropriate targets to chase for.
Hmm. And therefore, your revenue will likely double in 3 years if the math works out well for you, maybe 8 to 9,000 crore of top line. Is that broadly how one looks at you?
You do the math better than me, so I leave it there. But yeah,
Fair point. Fair point. And on the margin count, Vishal, on the margin count, broadly, it's the same kind of margin numbers that you and Bliss clock. I mean, a Tanfac is slightly smaller, right, in that sense, but broadly 22 to 25%. Is that something we can expect?
yeah, I think that's where. So historically, so we've been guiding in that range, and I think on a consolidated basis, that's a kind of a fair number that I would go with.
Understood. And this debt of 300 crore that gets added, what's the kind of rate at which you're getting that funding, and how should one start to look at that in terms of a payback as well?
So this debt is a long-term debt.
Right.
One, typically what we also did when we did the Jayhawk transaction, we had done a similar kind of a debt. So these are the debts which are coming in on a balance sheet kind of a pricing basis. So it'll be in a single digits that we anticipate those numbers to be. And it's a classic amortizing debt over a reasonable period of 4 to 6 years. So that's where we will be.
And any more plans with regard to acquisitions, debt financing at all that is required, or now you're going to be focusing more on ensuring that the synergies start to kick in, and that the numbers start to add up at least over the next 12 to 18 months, maybe.
Yeah. So one, right now there is nothing that I have anything to share on the inorganic side.
Sure.
In terms of integration, I think Jayhawk is now coming up well. The integration is working well. A large global consulting firm is supporting us as we had used their service, their support during even the Tanfac acquisition. We are using the same agency to help us in integrating and looking at synergies and creating value creation between the two entities. So that's continuing. That's continuing well. We are growing well there. We are seeing a lot of traction across customer, across technology, across operating leverages. So I think that's working well for us, I would say. And let's see where we go from here.
Okay. All right. Thank you so much, Vishal, for coming in and detailing that piece. Thanks so much. We appreciate it.
Always pleasure. Always pleasure to talk to you. See you.
Thank you.